Okay, perfect. Okay, so we are live. Hello, everyone, and welcome to another Chat and Learn here with Power to Fly. I'm super excited to dive into this next hour. I had a chance to speak, or a quick second to speak with our guest speaker offline, and I'm super excited to just listen to her share knowledge and inspire us all. I want to say thank you to everyone for taking the time out of their busy schedules to join us for this hour. I know a lot of crazy things are going on in the world, so I can't share enough that I really appreciate your presence. And with that said, we're going to dive right into some housekeeping rules so that we can flow through this next hour, get to some of your questions, and also give you all a chance to share your voice live and write in the chat box as well. So with that said, we're taking the hour out of our day. So participation is key. This isn't meant to be something you just press play and listen to. I know that we live in a world where a lot of folks are multitasking, but I just ask for your presence. We're going to be talking about some sensitive topics here. Money, is power, and it's running the world right now. So I know that, everyone has something to share. So I would really love if you can turn your cameras on if you're in a place to do so. Put your virtual backgrounds on, or, it's okay if you haven't showered. Don't worry, we're all virtual here. And feel free to turn your cameras on. Take yourselves off of mute whenever you feel called to share your voice. I've muted everyone upon entrance just to, avoid any background noise, but I cannot stress enough, and I'll actually sound like a broken record by the end of this hour. I want to hear from you. So feel free to turn your cameras on, take your mute off, and share your voice whenever you want. And since we will be covering some sensitive topics, if you want to write to me anonymously, you can find me in the chat box under Mariella. And then the last thing that I'll say is this is being recorded. So again, be present, and then you can rewatch this video later and take notes at your leisure. Follow us on socials and subscribe to our YouTube channel so you can see all the great chats we've got coming up. We've also got some great networking events coming up. We've got allyship to impact coming up this week. So make sure you check out Power to Fly's website so you can stay tuned there. So I've said enough. I'm going to pass the mic to our guest speaker. So Shania, I'm so excited to speak with you. Can you tell us a little bit about yourself, how you came to know about Power to Fly, and what you're excited to share with us today?
Okay, so hello everyone. I am Shanae Wilson, aka the People's CPA. So that's my social media account handle. I am a serial entrepreneur, certified public accountant in the state of New York, though I currently reside in New Jersey. And I am also a PhD student studying at Rutgers University, which is why I relocated to New Jersey. And I'm also a real estate investor. Right now, I'm primarily focusing on the more developing markets, so Detroit, Ohio, Chicago right now. And I just am thoroughly inspired and happy that I'm able to just give my financial knowledge when I can. So whether that's giving it to business owners through my services or through individuals from events like this, I am more than happy to share what I know with you all who are just looking forward to learning more about finances. I came about Power to Fly from Nicole. She reached out and we had initial conversation, and they say vibes don't lie. We had a really good chat and then we decided to just do this. So I'm super excited and thankful for her that I'm here.
Awesome. Thank you so much. Thanks, Nicole, for reaching out and getting this beautiful voice here to share knowledge with us. And with that said, I want to say that we have so many beautiful questions to walk through for this next hour. And we are calling from a pretty diverse place as far as the globe is speaking. And I know that even before COVID, we were doing these chats, and just the power of digital community really always surprised me to see where we are in the world and how we are more alike than we are different. So I'm just going to shout some folks out here who have written in the chat box. If you're just joining us and you haven't yet already put in the chat box where you're calling from, please do so I can shout you out. So I'm calling from Argentina and Buenos Aires. Our guest speaker is calling from New Jersey. We've got some more folks on the line from New Jersey. We've got Los Angeles, North Carolina, Turkey. Thank you so much. I know it's late out there in Turkey. Oregon. We've got the Dominican Republic. New Jersey again. Let's see, some Brooklyn, New York, South Carolina. Awesome. Washington State. Great. So keep it coming, y'all. I really appreciate you all taking the time. Connecticut, Brooklyn, New Jersey. Awesome. So if you see your question come up on the screen, we're going to walk through these questions that you all submitted offline one by one. And we're going to start with this question, for example. And when you see your question, feel free to chime in. Feel free to, if you had a dream last night and you want to bring that to the table, bring that. If this is not your question and you have some 2 cents that you want to toss in there, I cannot stress enough that we want to hear from you. And so let's just start with this first question here. Investing in the stock market has always felt like something rich old people do. AKA something that's not meant for me to participate because of my age, race, or lack of wealth or disposable income. I know this isn't really true, but I'm totally lost as to the basics of stocks or investing. Can you go over some basic terminology to get me up to speed?
Yes, so that's a really good question. And I'm happy that it was asked because most people just want to dive into how do I make money from the stock market. Understanding what it entails and the terminology is very, very important because you should be able to speak upon what you're doing. So some basics, start from the beginning, understanding like what the actual exchanges, right? So whether it's the New York Stock Exchange or the NASDAQ, this is where individuals, corporations go in and then buy and sell assets. So essentially, corporations are putting their equity on the market for you to purchase. So, and now we'll get into like stocks and bonds, right? So stocks are equity of a company. So you see how Amazon is what, like a $300 billion company at this point. You probably can't purchase Amazon for 300 billion, but you could probably purchase a share of Amazon stock. So even though you are not the CEO of the company, you are an owner. So when you are a stockholder, you are part owner of a corporation and you have equity in that corporation, meaning that once net income is distributed, you as a shareholder, that company is paying dividends, you may receive dividends, or as that company continues to do well, your share value will increase, meaning that just your portfolio increases in total. Then we have bonds, so they're very different because stocks are equity, bonds are debt, meaning that you're basically lending money to a corporation and they're giving you back that money with interest on top of that. So it's like an IOU to the corporation. Another, really good term for you to understand is dividends. I kind of briefly mentioned that. So dividends are poured, can elect to distribute dividends to their shareholders if they want to. So not all stocks distribute dividends. Some of them don't. When a company distributes dividends, you as a shareholder will receive dividend income in proportion to how many shares you own of that corporation. Most times dividends are paid on a quarterly basis, depending on the company. So some people try to set it up to where they're getting paid a dividend every month because different companies can have different year ends. So that allows you to get paid a dividend per month. And then we have how to compare markets, right? So sometimes the market is going really, really good. Sometimes it takes a tank and it goes down really bad. So understanding the difference between a bear market and the bull market is very, very important. As we've seen in the beginning of the pandemic, we experienced a very severe bear market. What does that mean? Stocks are on the downfall, basically. So with a lot of like retail stocks, with a lot of perhaps restaurant, their stocks, and even gas stocks, travel stocks like American Airlines, JetBlue, they all experience a very bearish trend, meaning that their value was going down. And it's because people weren't using their facilities, they weren't purchasing their items, so they were losing revenue. So the value of the company went down, therefore we experienced a very bear market. Bear markets are not something to be afraid of. If you get into the market while it's bear, you will actually experience a very high return on investment, which brings to our next terminology, understanding what your return on investment is. So when you purchase a stock, you'll purchase it at that value on that specific day. As you hold your stop, the value may increase or decrease. So the goal is to have a high return on investment. And most times with stocks, that's done by holding it on for as long as you can. As we know, sometimes companies may be on the uproar and they may go right down, right? So if you can calculate exactly when it's peaking, because even Sears is a good example. Sears right now is going bankrupt, right? But at a time, their stock market had that trend. So if you rode the trend from the beginning up until they hit their peak value and then sold your shares before it started going down, you created the best scenario for a great return on investment, right? So those are pretty good terminologies. The last one that I do want to throw out there, which is very important, is capital gains. So whenever you have a gain from your investment, so you bought your stock at $10, now it's worth $50 a share, that 40K increase is called a capital gain. It's important to understand capital gains because that's how tax is calculated when you sell your shares. So you don't pay capital gains tax when you hold on to your stock shares, but once you sell those shares, you now have created a capital gain transaction, and therefore you must pay capital gains tax. Capital gains tax can be calculated from two different angles. There's short-term capital gains tax and there's long-term capital gains tax. Most times it's better to hold your stocks and get taxed on the long term. Long-term capital gain tax rates are either 0, 15, or 20%. In the short term, your capital gains are going to be taxed at your income tax rate. So for those individuals who make a very significant level of income and you may pay effective tax rate around 30%, you would rather wait an extra year, convert your gain to being long-term, and perhaps pay just 20% on those capital gains. That creates a 10% tax savings on those capital gains. So when you do start trading and investing, you do want to just seek the help of a financial expert to explain these things to you, because what you don't want to do is get started investing and then look, all right, now I'm due all of this tax. I didn't plan for it.
Well, so I hope that everyone who's on the call now realizes, I asked for your presence in the beginning, right? Because I don't know if you can write as fast and with all of this information that our guest speaker is dropping right now. So again, please be present with us. And I actually want to get a kind of gauge and see where our audience is right now. Thanks for turning your camera on. I see you. Hey. Write in the chat box where you are in your journey so that as Shania is going through some of these questions, she can kind of, dive deeper and maybe even help you out right now in the moment. Because one of the things that comes to mind as you're speaking about this is all of the films from Hollywood that have been put, I just see okay, it's about to crash. We got it. Is stress, right? How do you avoid stress? This is, you can take your time to answer this whenever you want at the appropriate time, but how do you make sure that you aren't losing any sleep or losing any years off of your life, but maintaining, this projection of being on top of things. And then the last thing I'll ask you, Shania, is I know that we've got some folks in Turkey and Dominican Republic and Argentina. So I know that a lot of things that you're going to be, your expertise is in the States. And so in the case that, some of these global folks might not, know some of these brand names or things like that, if you can, maybe give them a global perspective as well, if that's even possible. I'm not sure if that's possible for some of the stocks that are going on in the States. But so we've got some folks already that are writing in the chat box. I love it.
Okay.
So what do you look at when wanting to find good stocks that are undervalued to invest in?
That is really, really good. So I have these 3 rules that I kind of use to help people understand how to get started investing. Number 1 is start with what you know. So what you found value in, right? So for example, many of us have these things here, right? Many of us may be on MacBook computers, or we may be on Windows computers. If you like Michael Kors, I like to start with what you found value in, right? Because if you found value in that may be a good stock for you to invest in because you found value in it. The second thing is look to see what others found value in. So again, we all have those debates. Oh, team iPhone, team Android. Both of those stocks are doing pretty well, So if others found value in those stocks, you can see potential there as well. Same thing about Uber. If most of your friends are just taking Uber, or now they're shifting more so to Lyft, or maybe there's a new company that's going to come out and shift your attention, that's where the value is going. So literally, it's about analyzing where the value is and where do you see it going based off of those around you. And lastly, the third tip is to research the future. As we know, we're moving more into this automation phase of life where robots are becoming our friends more and more every day. So if you are able to not you don't have to be super okay, I can predict the future type of thing. But if you look at the news, if you look at the trends and you know that this company is going to be the next big thing, you're going to be fine. Because honestly, I know some people who invested in Zoom when they first IPO'd at $36 a share. Zoom is now trading for well above $400 a share. you would have probably like 80x your income by just investing in Zoom, but people saw value in it. Like, all right, this is the future, virtual learning, virtual conferencing. And some of us who are a little bit more neglectful and perhaps didn't think that the virtual reality world would happen so quickly, we kind of missed out on that. But again, if we just are a little bit more proactive, because again, we use the news, we have social media, so follow the trends and see where things are going. But that's a great question.
I love that. And your handle says it perfectly. The People's CPA. I totally resonate with that. You're definitely like diving in deep here. So I'm just going to flag some of the things folks are writing in the chat box so that we can understand a little bit about different journeys for our live callers. I see on YouTube, someone is calling from Canada. What's up? Great. So we're pretty global here. All right, so we have, I'm still in school. I've managed to stay out of debt. Congratulations. I have some stocks and a 401k. Someone else has written, somewhat knowledgeable and beginning to pay attention to my investments and invest more aggressively. And then a quick question here from the same caller. Does owning a business change how you invest?
That's a really good question. So, because again, when it comes to building wealth, especially when you have a business, it's important to look at development from both sides. So your corporation can own assets on its own, and then you yourself can own assets. So, and the good thing about having a business, depending on your structure, is that you can structure like your compensation, and you can structure how your business invests its income. So if your business wants to own assets such as stocks or even property, whatever it may be, your business can basically build its own portfolio as well. To give you a good idea about how to assess that, I would say look at the balance sheet of your favorite company. So whether it's Apple, whether it's McDonald's or LVMH, and see what type of assets that company owns. It'll literally break into your mind how powerful it is to build a business and to leverage your business to help you as an individual accumulate wealth quicker.
Awesome. And then we have someone who has commented, remember I asked about like how to not like have stress triggers and just to maintain your cool. So someone here wrote, which I love, prayers and positive affirmations and being able to release and not internalize stress. I'm a motivational spoken word artist. Hey, what's up? My writing and my poetry helps me to release my emotions. Yes. And I love to talk about emotional intelligence all the time. So this is definitely a way to like use emotional intelligence to make sure you're doing something, you know, good in your life and not like weighing yourself down. So thank you for sharing that. We've got another question here, Shane. We got a question here in the chat box. Can you explain more about dividends and how they work?
Yeah. So essentially a corporation specifically, because only corporations can do this. A corporation can elect whether or not it wants to distribute dividends. So there are certain companies that give good dividends that we're more accustomed to, like Coca-Cola, Johnson & Johnson. Basically, once the company meets its net profit quota, they're able to distribute some of their net earnings to their shareholders. So say, for example, Coca-Cola exceeded its earnings and now they're going to, so they'll announce it beforehand too. So once you're a stock investor, it's important for you to stay abreast in terms of the company and their decisions at the same time. So you should receive like investor perspective, which tells you about the company and their plans, but then also news. Companies do release 10Qs, which is quarterly financial statements, which will have some information about the actual performance of the company as well. So basically, if they met their earnings goal, they'll basically distribute their net earnings to their shareholders. So remember, with the stock market, there may be 1 million shareholders, right? So even if the company distributed 20 million, that's really just $20 per shareholder, right? So that's kind of how dividends are distributed. The more stock you own in that company, the more dividends you'll receive. There's certain people who've been investing since they were 15, you know, a very, very long time ago. And they're able to literally live off of their dividend income because every quarter they may be getting like a 10K check just from dividends because their portfolios have grown. Because once the earlier you start investing, the quicker you can grow your portfolio because we have compound interest on our hand, aka our money just invests over and over back into itself. So you grow wealth a lot quicker. So the quicker you start investing, the quicker you'll build wealth. And again, with dividends, that's just a way for you to get paid from your investments. So it's really good to look into dividend paying stocks for sure for that reason. Because again, when we think about retirement, to have a stock portfolio that's able to pay you 10 to 20K every quarter just from dividend income, you'll live a more comfortable life when you retire.
Awesome. Thank you. We've got folks writing in the chat. Thank you, thank you, thank you. Awesome information. And then another question here. How much is an ideal amount to start investing?
Mm-hmm. So honestly, I would just say $1. Because I don't like to ever say a lot. You can buy fractional shares now, which is very new. Actually, I think the minimum is $5. $5. But it's still very, very low. So I love the stockpile, and they're not paying me to say this. I love using stockpile because you can literally buy shares. You can buy $5 of a share. So right now, Amazon share is probably well above, let's see how much, $3,000 for one stock of Amazon share. You can go in a platform like Stockpile and buy either $5, $10, $20, or $50 worth of that stock. Obviously, you won't experience as much gains as you would had you own the whole share, but you can get started with that, right? Because as your stock accumulates in value, you can go ahead and just, purchase some more stocks. So it's good to put yourself on a budget. I would say if you just get started with just like $5 a day, go on there and like buy $5 of one share of companies that you find interesting. So whether it's Amazon, whether it's Tesla, whether it's Apple, buy small fractional shares just to say that you own a piece of this company, even if you do own a fractional share. So what? You can get started, right? Because if you keep doing that, so now, for example, I think Tesla stock is around $345. So say, for example, you invest $30 a week into this stock. At the end of 12 weeks, you'll be able to own a full share, right? So start small. I never say you need $10,000 to get started because it'll discourage people from getting started. The most important thing is that you're learning. So if you start with just buying a $10 fractional share or $50 fractional share of these major stocks, challenge yourself to stay abreast with the news. So if you see news about Tesla stock or Apple stock and you have your fractional shares, that'll dictate whether or not you should hold your shares, or if the market is going to go down again, that's a good time for you to buy more shares, because some investors are saying that they foresee another stock market crash. And then those who understand the market know that's a great time to go ahead and buy some shares at a discount, because we all like sales, right?
Yes, and I see some folks smiling ear to ear. I love it. I've never seen so many smiles and cameras. No, I have before, but this is great, everyone. Thank you so much. And I've got Nicole writing in the chat box that she's very that she can do it. She was like, okay, I could do $1, I could do $5. And some folks, I see that you're actively searching to see where the companies are, and you've got some folks echoing that. So thank you all for being so present. I love this. We've got some questions in the chat box that I'm going to flag. And I love this. So let's see. We've got a little bit over half an hour left. And ideally, we put these slides on the screen just in case folks don't have questions, but I'm just going to cater to your questions here that you're writing in the chat box. So Stephanie writes here, I'm from Canada. I work and study part-time. In the long term, I would like to know, what do you think is much better? Investing in stocks in bulk or renting properties? Some say the former is better because it is liquid, especially during emergencies, pandemics. Yet renting properties is more profitable. Insights, and thank you for sharing your expertise.
Ooh, this was a really good question. Thank you so much, Stephanie, for asking it. I love this question because I either talk on panels specifically about stock investing and some specifically just about real estate investing, but I've never been able to really share how the pros and cons of each, because there are pros and cons. So essentially, the ideal portfolio would be to have a very diverse share of super duper illiquid investments, perhaps real estate because you can't sell those quickly, and then more liquid investments, right? And then it breaks down even further. You want to have some that's going to yield you more returns in the short run, while others may be yielding you more returns in the long run. And that's, again, your ideal portfolio. Because what you want to do is set yourself up to be able to hedge any scenario. So if the stock market is going down, but you're still making income from your properties, that's a win-win, right? Or if real estate market is going down, but the stock market is going up, you're still winning. So you really want to put yourself up in a position to win in every arena, because as they say, the average millionaire has 7 streams of income, not just one. So I won't ever say either or is better. I would say essentially in the long term, you want to be able to do both, right? And I would say, especially now, most of my clients are prioritizing real estate because the price of borrowing is literally close to nothing. Some of my clients are locking in 2.35% mortgage rates for 30 years. That's literally such a small cost of debt to own an asset, because remember, with assets, they appreciate. So though they consider real estate as being super duper illiquid, AKA you can't sell it right away and get cash for it, if you bought a property for a really good price, perhaps distressed, and you capitalize some of your expenses to increase the well-being of the property. So you maybe like bought a fence or redid the whole interior. Once you get that property appraised, you now have this thing called equity. And though, again, you can't sell the property and get cash right away, you could go to the bank and take out a loan against your property and have cash that way. And that's through like doing an equity loan from against your property from your bank. So I do think right now, if you could do it, locking in a very low mortgage for purchasing a real estate asset to hopefully rent out for the future is a really good ideal scenario. And if you have extra, I would say, go ahead and throw it into the stock market. And then because right now, again, stocks are going really low. So right now, stocks are back on the rise though. So I would just pay attention to the markets and make sure that you get in at a really good downfall of that stock, so you're getting the maximum ROI. But I do think having real estate is a really good asset, because that's something that's easiest and more beneficial for you to pass down to your next generation, right? So if you have a child, they may not know what to do with your stock portfolio, but they should know how to collect rent once a month, right?
I love that. And great question to segue into this next question. So we have a question about kids. Can kids invest? I have a 10-year-old and a 15-year-old. I would like them to start investing.
Yes. So you can actually open up an account for your child. Because they're not 18, they can't legally trade by themselves. So most parents end up creating an account for their child, and they have to initiate trades for the child because you have to be 18 or older to participate in the stock market. But you can create an account for your kid. So even though you have to execute the trades on behalf of the kid because you're the custodial parent, it's really fun to have your kids understand the stock market and let them watch their portfolio grow. So one of my business mentors, she used to give her daughter $100 allowance every single week. And however, it wasn't like, here's $100, do whatever you want to do with it. It was, here's $100, you research which stocks you want to invest in. And she did that with her every single week, and now portfolio was really good. Because again, the quicker you start your kids off, they're gonna be able to experience that growth exponentially, because on average the market does between 10 to 12% per year. So imagine starting off with a $100 portfolio, but then by the time they're 18, 19, they may have 20K in there easily just from investing.
Awesome. I love when kids are brought into the conversation, because they are our future and we're doing so much stuff to just ruin it for the future. So if we can get them a leg up, let's go for it. Okay, so we've got a question here from Ashley. Loving this. Is there any way we can talk about the actual buying the stock process? Where can I go? Should I open an account? How can I actually purchase a stock? Silly question, but thank you in advance. It's not a silly question.
So really good question. So most times we have to go through different exchanges, right? Again, that's the purpose of exchange. We can't go up to Apple and be like, hey, can I have one of your shares? No, what we do is go on an app like Stockpile, it's my favorite. Robinhood is really good as well. Or TD Ameritrade, Merrill Lynch, E-Trade. There's a bunch of platforms that you can utilize to go ahead and facilitate the purchasing of your stock. So basically what you do is create an account with one of these third-party intermediaries. And then once you create your account, you have two options. You can either fund your account, AKA deposit a lump sum of money from your checkings account to that account, or you can just do a direct transaction and just purchase the shares as you go on. People who budget for investing fund it per month. So I have clients that in their budget, we say, all right, every month we're gonna invest $1,000 to the market. So they'll do a huge just $1,000 import into the software and then take time to see how they're actually gonna distribute those funds. But then once you do that, depending on when you do it, it takes obviously time for your bank to clear. But once you facilitate the trade, you're locked in at that price at that moment. And then once and the stock market has to be open, it's another thing also. So it's only open Monday to Friday, 9 to 5 or 8 to 5, I think. So you can't trade outside of hours. So you can't purchase the stock over the weekend. You can put your trade in over the weekend and it'll go ahead and process on Monday, but they don't trade after hours. So the stock market does close, which is why we have like the ringing bell at Wall Street and things like that.
Nice, good to know. So actually I'm going to read two questions at once and you can kind of piggyback or approach them separately. So thoughts on Acorns or Stash robo advisors? And then another question, can we also address a lot of the AI apps that do investing? Is this a viable option as well?
So basically these two things go hand in hand. So the question that Holly and Ashley both asked. So yes, there's nothing wrong with using a robo advisor. What they do, and this is just the AI side of it, what Ashley kind of brought up, they create algorithms, right? Research, because again, I am studying for a PhD in accounting and information systems. We do a lot of sentimental analysis in our studies, AKA most times now with the stock market, prices fluctuate a lot more because of investor feelings. When we see bad news about a company, investors are going to feel like I need to sell my stock. Historically, we use financial statements to analyze how well a stock will perform and took some ratios to see how good they perform. But now news is shown to be a little bit more powerful and more timely with how good or bad a stock is doing. So for example, if Johnson & Johnson has news that says that they did not meet their earnings calls, that means that they're not going to pay dividends. So the investors may want to sell their shares off because it may look bad in the company. So robo advisors use financial statements, they use sentimental analysis, they use other types of trends to figure out how to trade a portfolio for you. Honestly, I've been hearing some good things, like most of the people who I know who use these robo advisors are able to at least grow their portfolios at the same rate as the market, because some of these robo advisors may even just index the stock market, like wherever the market is going, we're going to go here right with it. So that's perfectly fine. Obviously, once you're more active with trading and you are facilitating the trends, because you may know some things, maybe you read an article about the CEO of Tesla and it hasn't been publicly announced yet, maybe not on CNN, but you read a small article about how he plans to release this new battery. So you went ahead and purchased stocks right then and there. Your robo advisor may have not, because again, it's operating off of an algorithm. So yes, you can get good returns there, but obviously you get the most returns when you're more actively trading, which is why day trading is such a really a higher earning profession, because when you day trade, most day traders, they sit in front of their computers all day, but the reason why, if they see a stock about to start tipping down, they're going to execute a sell right then and there. So they're never really going to lose. Obviously, it takes like giving away your life from 9 to 5, but people do it.
So I have to bring this follow-up question up about AI, because I know we're at a crossroads in the world of technology, as far as, ethics is concerned with machine learning and AI. Can you speak a little bit more, especially because you're studying this right now? What should we be mindful for? What should we be more aware of as AI is developing in this world of financial responsibility?
Mm-hmm. So right, it's really cool. So I really get to talk about like what I research in school. Right now, a lot of the AI work that we're doing in the accounting profession is around bias, and it's around ethics, because basically algorithms are trained off of what you tell it to do. Like, all right, A plus B equals C, you execute D. There's going to be situations where events happen that haven't occurred in our lives. So basically the programmers don't know to tell the computer to do this. So when it's faced with that, what does the computer do? And that's a question that nobody kind of has the answer to yet. There was a really good paper about automatic driving cars, and given a situation where the car knows to drive on the road and there is a baby here crossing the street and a grandma here crossing the street, and there's no other way to avoid hitting either of them, who does the car hit? And it's like, the question is still like, nobody knows, because that's the ethical question, right? So I guess in terms of being cognitive, a lot of companies that have promising results and business plans around the future of AI are really good companies to actually invest in. Obviously, Zoom, something that we didn't see coming, and especially now that they're using augmented reality to like change our backgrounds and stuff like that, it's getting super cool. So we're just, again, staying current, staying informed. What you don't want to do is not be informed and then show up somewhere and you think things are what you see. Augmented reality is very real now, so you can go in places and it may not even look like what you thought it would look like. It's crazy. Or we can be on Zoom right now, and even I think virtual backgrounds are going to get so real that like it's probably going to start moving in the background and you really won't know that the person is where they are. It's going to get crazy. So just, just being informed, because that can give you some idea about how to invest, and just seeing how it's changing your industry. I know some of my friends are taking certain certificates so that they can get promoted, because now their companies are looking for people who are experienced in dealing with AI in their specific industry. And people were running for it from a long time, but now I do see a huge trend to actually embrace the change, because it makes things more efficient. What you don't want to do is be a displaced worker because you didn't educate yourself. So just show your corporation that you're staying abreast with this knowledge, and just do what you gotta do.
Great response. Thank you for that. I had to bring up the AI debate. It's happening. So and I love that you love speaking about educating yourself so that you can empower yourself, and that is definitely something that the fact that programmers don't know, it's we need to be aware of that as well. Okay, let's jump into some of these other questions here. So can we talk about the benefits of a brokerage account for those of us that are afraid of aggressive investing?
Mm-hmm. So basically, you're able to hire someone to act on your behalf. Most times it's an advisor, and there's nothing wrong with doing that either. So I would look, when you're picking a brokerage company or a firm or an advisor to manage your portfolio, you want to look at their historic returns, right? So if on average they're doing 15% a year returns, again, the stock market does between 10 to 12%. So they're beating the market, which is really good. Some advisors may be doing 15 or 20% per year. I know people who actually have brokers that do that for them. However, obviously, you do pay a fee for investment advising and for executing transactions on your behalf. But for those who like the more passive approach, that is an option for you.
Great. Thank you so much for that. So Rose here has written another question here. It's recently been in the news that SoftBank had been investing loads into the tech market during the course of the pandemic and pushing the share price up. Do you think that most share prices are now inflated, especially since lots of businesses will be registering for bankruptcy, which we will only see in the next quarter, and the market will inevitably fall in the next quarter, including the tech stocks? And Rose, feel free to unmute yourself if you want to dive in here, because I see you got a really chewy question here.
Yes, I love this question, Ro. This is a really, really good question, because obviously we've seen the fall with whose stock just fell? Tesla stock, right? I think Tesla and Apple. Yep, Tesla stock went down and Apple stock went down. And these are huge tech brands, like not even like the Zoom level. Like these are Tesla and Apple. They got their car got pulled for overvalue in the stock by I think $18 million. That's a huge overvalue. Same thing with WeWork, when they were like IPOing, they were putting all of this good news out, and then they got their valuations knocked down as well. So, and again, this is why educating yourself when investing is very important, because good investors are able to understand when things are being a little bit fluffed. Like there's no way they did this, like, so obviously we don't know the truth ever, but it's important for you to kind of place your bets where they are, right? So some people even exercise the use of options in this specific type of scenario, where they'll buy, if they expect that the stock market may go down, they may exercise a stop option, so that if the price is going down, they can execute a trade and sell their shares also, they won't lose too much money, right? So it's really up to you to just stay educated. We don't know. Hopefully the stock market does go back down. I do personally feel like they may be very inflated due to the fact that they're able to say it because everyone sees how important technology is now, given the whole pandemic that we're dealing with. So once it falls, it's a good time for us all to go ahead and buy some stocks.
I love this smile that every time you say that, it's like, come on, kids, you got to do it. It's like, listen to the teacher. All right, so we've got a great question here from Cindy. Big banks are starting to change their opinions towards cryptocurrencies. Do you have any thoughts on investment vehicles that are non-traditional yet highly volatile?
So this is something that's like because even JP Morgan announced that they're like looking into like utilizing cryptocurrencies. And so there's so much that's going on in crypto that's so hard to kind of give a full opinion on it. Number one, the issue with crypto to me is the fact that, and this is the purpose of crypto, is to not be backed by like a government, right? However, how do we regulate things? We need some type of regulation. What we don't want to happen is, and this is the issue with Bitcoin that nobody can kind of see to solve yet, is that the values fluctuate so quickly. They're more volatile than the stock market. So if you're buying a cryptocurrency and say you have $5 worth of Bitcoin, right? If tomorrow the vast majority of the population sees value in that Bitcoin, your $5 may be worth $10. But what if you sold somebody something for that $5 and you're like, shoot, I could have waited till tomorrow and got more? So that is like the biggest issue with cryptocurrencies. So I do feel like because the banks are seeing interest in them, the banks regulate our monetary supply. Well, the feds do, but the bank facilitates the actual, like, here, you borrow from here, here's your money here. So if they continue to express interest here, I do see that they're going to develop some type of regulation, and that may be the future, because the fact that we're all home now is showing you how less and less we're going to use cash also, right? Because nobody's going to the store to physically buy something. We even started transitioning from cash once a debit card and credit cards came out. We use plastic. So now it's going from using paper cash to using plastic, and then perhaps to using Bitcoin and other cryptocurrencies.
And I'd love to just I'd love for you to talk a little bit more about cryptocurrency, just because with AI, cryptocurrency, like, these are huge topics that I feel like it's so overwhelming to even start research. So maybe you can point us out there. How can we educate ourselves about these really big topics that are, coming into our reality?
Yeah. So there's a bunch of like free courses on like Udemy, what's these other platforms? Like, there's a bunch of like education platforms that you can take a Bitcoin 101 course for free. So I would definitely suggest starting there, because it's a lot. It's very hard for people to kind of comprehend. Even for me, it took me reading maybe like 20 papers before I thoroughly understood what crypto meant and how people are investing in it and why they're investing in it. Because ultimately, it was built to help facilitate the ease of transaction. So the fact that you don't have to go through an intermediary to send money from somebody, I'm sending it from my account to your account. But then it got abused by the dark market, which we're all familiar with. People were using, because crypto is so off the radar and not tracked by our government, let me go ahead and sell you this illegal painting, and you just send me the money via Bitcoin. So there's so many factors and variations to like the importance of crypto and what people are doing with it, that I would thoroughly suggest taking a 101 course, number one, to get started. And then from there, perhaps speaking to a crypto expert. There's a bunch that I follow. There's a guy, his name is Bitcoin Vegan on Instagram, and he does classes, like 101 classes, where he talks about how to get started with actually investing in crypto.
Awesome. And then we have someone here who's just echoing that they appreciate that you're being honest and saying it took you a moment to get a grasp on cryptocurrency. And I say that I applaud you for that as well. You know, that you don't have all the answers, and actually things are moving right now in this moment. So I have some more questions here. I'm gonna flag some private questions that I've got here. Any thoughts on investing in Zoom or TikTok in this political climate?
I'm sorry, can you repeat the question?
Any thoughts on investing in Zoom or TikTok in this political climate?
Really, really good question. So with TikTok, they're not a public company. They're gonna get purchased by someone. That's the thing there. So and they're debating whether Facebook's gonna buy it. I think somebody else put a bid in like last week about TikTok. But because again, we went over the 3 rules, go over what you see value in, what others see value in, and where the future is going. TikTok is a good example of what others see value in and where the future is going. So depending on which company go ahead and purchases TikTok, that may be a really good sign to invest in that specific company. So whether it is Facebook, or I think, did Microsoft put a bid in? I think there was like 3 companies that put a bid in for TikTok. But again, whoever purchases it, you know that they'll experience an influx in their stock value. IBM, thank you so much, Haley. And then similar to kind of what happened with Disney wants to purchase Hulu, right? Once they purchased Hulu, stock price went all the way up. So think about it like that when it comes to TikTok. And then the second question was about
Zoom or TikTok. They were flagging those 2 companies.
Right. So Zoom stock price may, in my opinion, may be inflated because everyone's like investing in it now because they're like, oh, we just Zoom here. They IPO'd not too long ago at $36 per share. They're trading at $435 a share. They went up like 407% in 2 months. Crazy numbers. So though obviously it is a valuable company, the thing about Zoom is that they have many alternatives. You know, Zoom is one of the few publicly traded of their kind. So you never know. What if a competitor incorporates a better service and then now IPOs? That may be a better, bang for your buck. So again, it may be a little exactly. It was at $140 in March, and now it's at $435 a share. Zoom's stock price is valued higher than it's more expensive than Tesla. So it's like you got to kind of think about it, and obviously none of us have the right answers. It's really up to like kind of how you feel and how knowledgeable you are, but definitely just be aware that some stock prices may be inflated. We are seeing a lot of companies get their cards pulled by investors lately. Oh no, you guys overvalued by 18 million. So just be aware of that. I'll hope that. I think their stock price is crazy right now. That's my opinion though.
I love it. And they're listening now as we're live on Zoom. It's good though. We got to be authentic and real.
Oh, so sorry. No, Zoom's great. We love you guys. Thank you so much.
All right. I've got another private question here. Any favorite investment or finance sites, newsletters, and or people you follow that we can too?
Oh, yes. So for sure, subscribe to CNN Money. Subscribe to what's the other one I like? Let me just type in my Gmail right quick. For those of you who want to learn more terminology, subscribe to Investopedia. They also give free like daily investment terminology. But for sure, CNN Money, Yahoo Finance, subscribe there. Subscribe to certain columns in like Medium. So if you go to medium.com, find people who are experts in speaking about finance and then follow them, and you'll get their emails to your email account also. But again, I think the best thing to do is provide yourself with the informational overload. Like just educate yourself every single day. In terms of people, I have a friend who wrote this really good book. It's called Bank on You, and then there's another one called Stack. His name is Jeremiah B. I'll type his name here. He's actually an investment advisor to like a lot of wealthy individuals out here in America. He understands just how money operates and circulates through the economy and how to position yourself to always be on the winning side no matter how the stock market performs. And he kind of speaks about that in his books. So here's those 2 books. And then there's a woman on Instagram. I don't know her personally, but her name is Ashley Fox. And she does have an investment community. I think it's called Wealth Builders. And I haven't experienced it yet, but people that I know have taken her classes. She does a lot of free webinars also. So for sure, follow her.
You know what, Shania? I feel like you can write a book about like who you recommend. So how about this? We're gonna send a rewatch email to everyone who's joining us live, and I'll just ask that you kind of put things that you would recommend, and that everyone can just click on and access it there. If that's okay with everyone on the call. I see some people nodding their heads. Okay, great. So okay. I also want to say we've got about 10 minutes left. So if you want to take yourself off of mute and ask a personal question or, you know, a general question, now is your time to shine. Also, Shanae, we've got 10 minutes left. So if you want to wrap anything up, let us know. I see someone's coming off mute. Go for it.
Okay. Can you hear me okay?
Yes, I can.
Great. I'd really like to know, you mentioned in the beginning that enacting a tax professional early on, as soon as you can in your investment journey, you would recommend. What are some of the things that you should look for in a professional? Should you do an accountant? Is a CPA more advisable? Could you speak to that?
That's a really good question. Thank you for asking it. So you want to have somebody who kind of fits you. It's not about how good they can do for you. It's about how comfortable you feel with them. I never suggest people to just find somebody, oh, this person seems good, let me work with them. That person should match your communication style. They should match your long-term goals. They shouldn't be trying to sell you anything. Number one, that's whenever you're dealing with a professional, if they're trying to sell you something, they're not the person for you. A person should be interested more in your goals, number one. So they should ask you, what are your short-term goals? What are your long-term goals? What do you currently have for us to get there? What are your current plans to get there? Because then they can give you more specific advice when it comes to what you should do with your money. I would say, so when it comes to the taxation of like capital gains, real estate, you do want to speak with a tax accountant, a CPA. Really, the difference between an accountant and CPA is like the skin in the game. CPAs are held to a high standard as lawyers are. So we cannot legally give you like, you know, some advice that we won't give somebody else in due care. It's the same way how lawyers act. So you get that sense of security when you're dealing with a CPA, which is why people don't go to paralegals to ask for law advice. They go find a lawyer. So that's the kind of thing there. But when it comes down to creating your actual financial plan, you do want to have a really good financial planner because that's what they do. So most times I work very closely with my clients and their financial planners. The financial planners will give the investment strategy. They give the retirement strategy. I'm going to give the tax implications of which on how to maybe eat some more tax and now so we can live tax-free in the future or vice versa. So you do want to have both on your team. I actually have a free ebook that literally details when and where do you need a financial planner and CPA in your business. And it kind of applies to your personal life a little bit as well. Now feel free to drop the link in the chat in a second.
Yes, awesome. Thank you for asking that question live. So anyone else want to come off of mute? If not, I will read some questions here in the chat box. So I'll do a light pause and see if someone wants to come off of mute.
Don't be scared.
Hi there.
Hi
there. It's Cindy.
Hi, Cindy.
So I am still a noob in my investment journey, but having a ball learning finally. And so I did put a question there and I wasn't sure if you're going to be able to get to it, but I feel like there's other people that are just as excited as I was when I first started learning and wanted to get started, but was afraid. But I wondered, what would you recommend for that person who wants to get started like today?
Mm-hmm.
Like, what would you recommend? Because I know what I did, but I don't know. I want to know what you would say.
Specifically with investing?
Yes.
In the stock market?
Yes, your energy is so high. There's absolutely no one that is not going to do something today. Your energy is high.
So number one, again, I would pick 3 different accounts. I never say, oh, just get this specific one. Like, no, maybe create an account with Stockpile, Robinhood, and another investment platform would be like Betterment. So pick 3 different accounts to analyze because again, nothing in this world is a one size fit all. You need to find the platform that you find easy for you to work with. You understand how to maneuver through it. You understand where the resources are, how to buy and sell. So I will pick 3, make accounts with them. It won't hurt to make accounts. And then see which one you like best. Then go ahead, and if you have it, why not get started with investing maybe $25, $50 just today. And again, because these stocks are on a rise now, like Apple, Tesla, I would then say to look at the news. So you can go on Yahoo Finance, you can go on CNN and see what investors are saying about these bigger stocks. Should you buy now? Should you not buy now? Or perhaps look at stocks that are on the uprise, and then go ahead and just pick your first stocks. And again, I would say it'll be good best practices for you to create an investment budget. So maybe if you save $100 a week, every single month you would distribute how you distribute that $400 for your budget. So make yourself an investment budget, keep track of what you invest in. For sure, diversify, pick stocks in different industries. So have some tech stocks, maybe some travel, gas, and JetBlue and those type of stocks. So there's a bunch. So there's another good app is called Stock Trainer, virtual trading. This is where you can go ahead and
Okay, got it.
Work out how to start learning how to trade as well.
Yeah, I was gonna say the idea of just starting with $5 is a great idea, especially if you don't know anything but this conversation. I think the idea is get started and we'll learn.
Yes. Nobody has all the answers. We don't, but we learn. We learn and we share with each other. Or maybe another thing that you guys can do is start a little investing group chat. So if you guys want to just start with $5, because you can start $5. Maybe everyone invests $5 a week, but somebody who's in the group, you guys should rotate who picks what stock per week and why. Because again, it's not about buying the stock, it's about understanding why we're purchasing it. So it'll challenge you all to be able to present in front of one each other and convince the group why we should buy $5 worth of this specific stock. That'll be a great thing to do.
I love that.
Down for it.
I love collaborating. That's so nice. So with that said, and actually you were just a little bit ahead of me. I was just going to say, for those of you who are interested in connecting, I like to use this time since we're all here, you can write in the chat box your preferred way for people to get in touch with you, whether that's LinkedIn, whether that's your, Instagram, Facebook, email. And then, feel called to, start some of these groups, whether it be with one person who's on the line now or a couple of you together. Feel free to connect with me on LinkedIn as well. I really like to use this time since we're all here together to, put things into motion and practice what we preach, especially since Shania is here being so awesome and vulnerable and authentic and dropping knowledge. Let's try to put some of her tips into action now. So I see some of you all are already writing in the chat box. Thank you so much. Write in the chat box how you want people to connect with you. And then, we've got 2 more minutes. Can you give us some food for thought and then let us know how we can connect with you, and we will end this chat. I told you the hour would go by so fast, but I'm going to pass the mic to you.
All right. So the last thing that I want to share about investing is that we want to be as emotionless as possible. That's a very, very important aspect of investing. Because again, in the short term, you're going to see your stocks fluctuate. Apple goes up, they go down. Tesla goes up, it goes down. But you as an investor should put your emotions to the side and remember that in the long run, most stocks are going to give you a high rate of return if you hold on to your stocks. So though you see your price going down and up in the short term, do not let your emotions drive your decision. Investing is meant to be a long-term game. The whole definition of investing is investing. I'm here, this solidarity. So just make sure that you are disconnecting your emotions from your actual transactions. Stay educated, stay optimistic, and I think staying creative and being a visionary definitely does help with investing. You guys all have each other to leverage. For sure, leverage me, follow me. I do share tips here and there on social media about the real estate market and stock market. Stay connected. Again, I'm here to help. I think that's pretty much my last little piece of tea.
Thank you so much, Shania. I'm so happy to have been with you this last hour. I know that our live callers are as well. So We've got some food for thought. We've got the LinkedIn doc there that Nicole put in the chat box. So if you can access that, and if you do want to connect with any of the live callers, feel free to do so. I'm going to be reaching out to you, Shania. Thank you so much, everyone, for joining us, and have a great week. And remember, you can do whatever you want to do. Put your mind to it, and we are visionary people. So I love that you left us with that note. So I'll see you all on the next chat. Bye.
Thank you.